The best price action trading strategy. Hey guys, welcome back to another episode. In this video, we will teach you the best price action trading strategy that no one ever told you. It is simple to learn and not confusing. So, by the time you finish this video, you'll know exactly when to enter high probability trade using the best price action trading strategy. As usual, we'll have plenty of practical examples. The idea is to fully understand this wonderful trading strategy and to make the most out of it. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto, because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. Before we start with this price action trading method, let me explain what price action is all about. This will help you understand how to use the strategy effectively. What is price action? Price action means how the price reacts when it reaches certain high or low levels. This technical analysis approach will help you learn things from the price history to identifying the swing high, swing low, trend lines, and past support or resistance areas. With price action, we don't need complicated indicators or averages that distract from the price itself. The chart looks clear and simple. Some traders don't even use indicators to make a living. Also, what's special about price action trading is that it focuses directly on how prices move, not on slower indicators. This lets traders make quick decisions based on what's happening right then in the market, instead of using models that might be slow to react. Unlike strategies that rely on indicators, price action gives us real-time clues about what the market feels and where it might be going. We can spot certain patterns like flags, pennants, or double tops bottoms, which tell us a lot about possible market changes. For example, a flag pattern, a small rectangle after a big trend, often means the trend will keep going. On the other hand, a double top, with two peaks one after another, might show that prices could soon drop. Next, discover the most powerful price action trading secrets that no one tells you. What are the best secrets of price action trading? The top 5 secrets that can turn your losing trades into successful ones in price action trading are: first, the location is more important than the price action itself. In other words, the where is more vital than the what. Even the worst possible price action at the right location can lead to a profitable signal. Second, price action will always follow the path of least resistance, aka the trend. Third, price action follows 3 phases: accumulation, markup, and distribution. Fourth, price action moves from small price ranges to big price ranges. Fifth, the size of the price action is more important than you think. Price action represents the traces left by big investors, also known as smart money. Understanding the forces of supply and demand that influence price action is even more crucial than comprehending price movement itself. Additionally, to enhance your ability to read price action, combining it with indicators can help filter out many false signals. Looking ahead, you'll discover practical methods to excel in price action trading and improve as a trader specializing in price action. Mastering price action trading. Becoming skilled at trading with price action doesn't have to be complicated. That's why we've laid out a simple and effective way to analyze price movements. Without further ado, here are 4 trading steps to analyze price movements in any market. Step 1. Start by analyzing swing highs and swing lows. Every time you open a chart, begin by studying the relationship between swing highs and swing lows. In an uptrend, price movements will show a series of higher highs and higher lows. Conversely, in a downtrend, price movements will display a sequence of lower lows and lower highs. However, if there's no clear direction or you can't identify a distinct trend, then we're in a ranging market. Step 2. Measure the distance between swing highs and swing lows. The second step involves measuring the distance between these swing points. What concerns us is whether the distance between these swing points increases during a trend's development. If the wave's distance widens, it indicates strong momentum. Conversely, if the wave's distance shrinks, we understand that the momentum is fading. By combining wave analysis and price action, you gain a better understanding of what's happening in the market. Step 3. Real support and resistance occur with long candle wicks. Another trading principle to follow is that real support and resistance typically develop when we see price action with long wicks. By observing long wicks, we can identify price levels forming strong support and resistance. Long wicks usually indicate a strong price rejection. As a general rule, we aim to draw support and resistance levels near price action with long wicks, as depicted in this chart. Step 4. Combine price action with indicators. An example of combining price action with indicators is by merging pin bars, engulfing bars, inside bars, etc., with technical indicators like moving averages, stochastic, RSI, MACD, and many others. Forex technical indicators are great for filtering out some poor signals. These are the best technical indicators and trading systems to generate buy and sell signals. Firstly, the multi-moving average system combines special moving average indicators to make it easier for us to see what's happening in the market. When traders combine this system with price action analysis, they make better trades. Secondly, the Vostro system is famous for its Vostro trading strategy. This analysis technique helps us find the right trends by using lots of market stats. Using this Vostro analysis, price action traders just need to wait for signals that match the market trend shown by the Vostro system. Thirdly, the B-Band's Ozymandias system makes it easier for traders to do price action trading and predict which way the trend might go during a ranging market by using Bollinger Band calculations. By employing these trading strategies, you can swiftly analyze across all markets and time frames. As seen in the chart, identifying trend and momentum becomes quick and effortless. So, if you want to implement the exact setup shown in this video, you can download all the templates and indicators in the description. I've included a template with the system that you can simply upload to your chart, and it will automatically plot all these indicators perfectly on your charts, so there's nothing for you to worry about. Get the download link on the description. Let's continue our discussion. Pin bar price action trading strategy. This price action strategy will entirely focus on a price pattern called a pin bar. This candlestick occurs when the price reaches a specific level and gets rejected from it. It has a long tail with a small body. A pin bar can look like this. There are various characteristics for a specific pin bar. For instance, the long end of the candlestick is called the tail, while the small end, or the opposite side of the candle body, is called the nose. Most agree that the long tail, or tail, should be at least 2/3 of the total length of the pin bar itself. The other part of the pin bar naturally is, at most, 1/3 of the candle. Additionally, the opening price of the candle and the closing price should be relatively similar. This forms the body. To confirm a pin bar, you should wait until the candle is closed. Just because the current candle looks like a pin bar doesn't mean it actually is. Basic guidelines. Step 1. Identify pin bars on your chart. Note: this is a stock price action strategy and a forex price action strategy. I'll use a currency pair as an example. Price action charts can be used in any market and time frame. As you see, the tail of the pin bar is above the body, which is seen as a bearish pin bar. In this case, we anticipate the reversal movement. In this ranging market, the bull is really pushing to keep this upward short-term trend going. But the bears are too strong, so that's why we see the bearish pin bar forming. This is a perfect example of a pin bar price action reversal setup. So, what's happening? It's crucial to interpret the pin bar in the context of the market environment. In a ranging market, a pin bar might indicate an upcoming breakthrough as traders test and reject key price levels. Similarly, in an uptrend, a bullish pin bar could signal a continuation. Conversely, in a downtrend, it might indicate a potential reversal. Step 2. Understand why the pin bar happened. Why did the price suddenly turn around, hitting a certain point and then dropping sharply? Well, take a look at where the tail touched the resistance price area. A resistance point in the past could become a support point in the future. But a strong resistance formed by a long wick usually remains a resistance several times, just like in this example. You can see that what happened was the price reached that level but couldn't break through. When we saw the long bearish tail, we decided it was time to enter this trade based on what we observed in the previous chart. This is what price action is all about, learning from the past to make educated guesses about where the price might go next. When you trade price action, it's like being a detective. You collect lots of evidence to back up your ideas. Sometimes, the simplest approach is the best. Study the charts, draw thoughtful conclusions, and make your trades accordingly. Step 3. Enter the trade. Simply enter the trade 2 to 3 pips away from the break of the pin bar's nose. Step 4. Set stop loss. Place a stop loss 3 to 5 pips from the tail. In this case, the tail end will serve as a resistance area. So, if this is breached, the trend might continue upward. That's why you place the stop 3 to 5 pips away from it. Step 5. Exit strategy. Your exit strategy is when you reach the first support or resistance level on your chart. As you can see, the price reaches a certain point and then halts. Once we notice the price action stalling, we immediately exit the trade. Price action is another fundamental element to learn when trading in markets. There are thousands of strategies you can use with price action. It's important to find something that suits you. These pin bars are hard to miss. They're relatively accurate when you learn why they form. Pin bar candles appear across any time frame. A practical rule is, the higher the time frame, the stronger the signal. However, that doesn't mean it won't work in a 5-minute time frame. Don't trade every pin bar you see forming. Gather essential information from the charts. Then, draw the best conclusions to decide whether to enter a trade based on the rules. If you found this video helpful, or if you want more videos more often, make sure you subscribe, click the notification bell, and share this video across your WhatsApp, Facebook accounts, or X to show your support. See you next time.